partner of 7GC, a 400 million euro growth venture fund in the US to back emerging US tech companies with their expansion to Europe. In addition, Steffen is also the founder of Moonfare, the world's largest digital platform for direct private equity investments. Not a small feat. 7GC is investing out of Fund 2 with a total 400 million euro AUM and an established portfolio of 15 companies and notable investments including Jackpocket, Geo, Hims and Hers, and Steffen focuses on SaaS, FinTech, and AI. Now, if you enjoyed this episode or are on the fundraising trail, make sure to mark 16th to 18th of April as the days where you will be in Amsterdam for those 0100 conferences where you, aside from meeting tons of LPs, can also meet Steffen as he is one of the conference's big speakers. I have enjoyed getting to know Steffen incredibly much, and I hope you will have the chance to do the same at the Amsterdam conference with the 0100 team. Now, if you enjoy this show, do drop us a review, follow the pod, and subscribe at eu.vc.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.
This episode is brought to you in partnership with 0100 Conferences, which organizes networking events connecting LPs and GPs in private equity and venture capital firms across Europe. Their upcoming event is 0100 Conference Europe from April the 16th to the 18th at Leonardo Royal Hotel Amsterdam. This is a pan-European opportunity to network with major LPs and GPs from firms like Bain Capital, Permira, EQT, 500 Global, Alvin, ESAS Holding, the Carlyle Group, Adams Street Partners, Aegon Asset Management, and Odo BHF. Save the dates. April the 16th to the 18th at Leonardo Royal Hotel Amsterdam.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
So, Steffen, I think I got to say AR there, which is obviously AI, because augmented reality maybe would not warrant a full investment focus right now. But let's see as things evolve. Steffen, before we get everything started, let's just ask you to share your story with us.
Look, with pleasure, Andreas. And let me say, first of all, thanks so much for having me. It's a real honor to be part of your podcast today. Look, my journey into ventures really goes back to my time when I started at KKR. KKR is more known as one of the pioneers in private equity, one of the largest buyout firms out there. But you know, back early in 2000 and the years to follow, we as a firm at KKR thought more and more about entering, the technology side of things. I became a member of the Media and Tech Group early on when I joined in 2004, and really became a bit of a digital spearheading force within the firm, making sure that we really think holistically about tech. And this was really what brought me at the end into venture. I left KKR then in 2015, and I wanted to come up with something really innovative and founded 7GC, which is a venture firm, a growth fund that is basically, differentiated because it's helping and supporting US portfolio company with their expansion to Europe.
And tell me, if you could just add into this story, how did you come to found Moonfare? Because that's, of course, a very big player in Europe.
Oh, wow. That's interestingly, Andreas, that happened simultaneously. When I came up, when I left KKR, first of all, I must say, I wanted not to do something, more of the same. I wanted to do something, call it out of the ordinary, something innovative, ideally something that hasn't been out there before we started. And this is exactly Moonfare. Why Moonfare and how did I come up with it? As a senior executive at KKR, you have the opportunity to invest, and you are, by the way, expected to invest into the KKR funds, into the private equity funds. So put your own money where your mouth is. And I've been doing so very, rigorously since 2004 when I joined. until I left the firm. And when I, had my goodbye meeting with Johannes Huth, the guy, a great partner, by the way, of mine and a friend who's running Europe, I asked him, Johannes, can I put another 100,000 into the next KKR fund? And he told me, look, that's not possible. You're not anymore part of the family. 10 million is the minimum. I first thought he was joking with me. I have 4 children at the point in time. I just bought a house. 10 million, absolutely not my pocket size. But he said 10 million. So I left KKR and I was sitting literally in a Starbucks coffee shop and was thinking, look, there must be more people out there but you who want to invest into private equity. And I was calling up my friends, former people from Goldman, BCG, Bain, McKinsey, everyone from whom I expected could put together some money. And this was really the idea behind Moonfare, to build this community that as a group would be able to invest and to reach the 10 million. And this is what Moonfare became very rapidly now, largest digital platform, over 3 billion in assets under management. And we are active in the meantime globally in 22 countries.
And I think anyone in the audience will now say, okay, so Andreas has been looking forward to this conversation. And you bet I have, because of course, this is very close to our heart. And as I said to you in the beginning, Steffen, when we started doing what we're doing with our syndicates into funds here in Europe, everyone was like, you're going to be Moonfare for European venture. And we're like, no, that's not the play here, but we can get more into that later in our conversation. But obviously, this is going to be a hugely interesting conversation for me. Steffen, before we go further, let me just ask you to also give us a pivotal moment. And we'll, of course, to everyone thinking that we should continue this conversation, we're going to talk much, much more about Moonfare and the whole vision and growing it and so on. So this is a really big episode on democratizing venture and private equity. But now, Steffen, give me your pivotal moment.
Look, there are many moments. That's I guess a consequence of age. But there is really one moment, that I want to highlight, and it goes back to the year. It was January 2007. Andreas, when I was living in London in these days with KKR, as I said, and the iPhone got introduced by Apple. And I really remember the moment, there were the famous advertising, this black and white shadow stuff from Apple on every bus running around. And I, being very much into tech and I studied physics, among others, I really understood very quickly that this device would have the potential to change the world. Everyone soon talked about it. It was talk at dinner parties, at cocktails, and I thought about putting some money to work. It was 2007. I waited a bit, until the iPhone hit the market. It was end of 2007 in the UK, and I didn't invest. And I tell you why. The share price, and this is for me stunning, always when I tell the story, the share price in these days, 2007, was at 30 cents, per stock. And the share price tripled in 2007. And I thought, oh my God, the train has, left the station. I've left the opportunity. It's too late. You were sleeping, Steffen. I was shouting to myself and finally decided not to invest. Look, fast forward, everyone.
Best decision ever.
Yeah. And I want to tell you, today's share price of Apple is 175 euros. So it was still 175 times more money. If I had invested 50K, it would be close to 10 million. So what is the gist of it? What kind of point do I want to make? It is investing is about when you see a mega trend and you believe it has already left the station. It's in many cases not true. Things take much longer than people believe, and even stock markets don't adapt to new realities in the pace they should. That's one thing, and which is associated to it is equally important. As an investor, you have to be patient. And if you are not patient, if you're an impatient person, don't become an investor.
Before we then go into the whole Moonfare story, which will be the main part of our conversation today, I would love to just stay with 7GC and particularly because you now said the iPhone moment in 27. And everyone is kind of likening the AI moment now. And of course, you're also heading up AI at 7GC. So my question to you is, do you see the similar dynamic now? Do you think that we are in the same place as we were in 2007 with the iPhone? Platform shift and everything?
I would say it is even more than this. Bill Gates here at the Munich Security Conference last year or so, just after the release of OpenAI, ChatGPT, said that he considers the AI revolution to be even more meaningful and larger than the entire internet revolution. Andreas, why am I convinced that this is happening, and why do I think we have an incredible era in terms of change ahead of us? And this is probably the iPhone moment, as you said, in 2007 and even more. What AI is not a new theme. Yeah, I even learned about AI when I was at university, and this is 30 years ago. What has changed, and this is the moment that people have to understand. What has changed is that through the partnership between OpenAI and Microsoft, which became a deep partnership of 10 billion, investment from the side of Microsoft. What has changed is that suddenly, and that is the first time ever in Google's history, Google got the red alert. So the red alert means, our business model is fundamentally threatened. And what's now happening is a race amongst the largest and most wealthiest, from a financial standpoint, companies in the world around AI. So for the entire ChatGPT thing that happened December 6th, 1.5 years ago, was just a wake-up call for a gigantic industry to wake up and to fight against each other with all means. And now we are seeing tons of resources, money floating into the system, not only from the big six companies, from the largest tech companies, but also from the entire venture and growth equity system, including private equity. So it's in a way, the answer to what you've said is, for me, it's a self-fulfilling prophecy. Yeah, it's happening because people want it to happen, but so much money is floating into the market because of this disruption that was only an initial disruption that happened through ChatGPT.
Now, you being a growth stage investor, we of course most often talk to early stage investors, but being at the growth stage level, I imagine you very, very much see the competition between corporates and private equity and venture, which in AI has really, taken a step change. Normally, you don't see corporates leaning in as heavily as they do here, definitely impacting prices of everything. I'd love to ask you, how are you seeing the competition in the AI space on the deal-making side differ from what you normally see?
Yeah, look, we are seeing this already. Interestingly, that the large corporates and large tech companies are forging alliances. As everyone knows, Microsoft is close to OpenAI, but Meta is pursuing their own approach. Amazon is partnering with another competitor of OpenAI. So there are couples emerging. What does it mean? It means that the alliances, the forging of partnerships is happening earlier, very early on, in so to say, in the lifetime of this phenomenon. And why is it? It is because AI, demands so incredibly high investments that you have to develop a deep partnership. You can't play around with 5, 10, 20 companies, because the investments behind meaningful AI developments are so high. And this is why these partnerships are happening earlier. So that means, in terms to your question, that the competition space is more limited. People act earlier, take companies earlier captive, as happened with Microsoft and OpenAI, and others are following the same pattern. So there's less of an obvious competition. What's happening now is underneath the super surface, as I call it, what we all are observing. There are, of course, dozens of companies emerging, smaller companies. But Andreas, my view is, at the end, AI will and have to be, in my view, a regulated industry. And I would assume that as AI is playing in the US and China, as we all know, But talking about the US, I would assume that the large corporates, and in particular the large tech companies, will basically, cut regulatory deals, which will make sense. So I'm not negative about a deal with the government, because the industry cries for regulation. So at the end, and probably it's conventional wisdom, but what I'm quoting here, or what I'm saying is, I'm a big believer that the top 6 will be the most beneficiaries of the entire AI revolution, because of their size, because being close to Washington, and because of their dominance in the market. I don't think that there will be a new Google AI or a new Facebook or Meta AI emerging, which is not known or not at all on the horizon as of today. They will be absorbed in the existing ecosystem. That's my thesis.
What do you think about so that means for you the platform play / foundational model play, that ship has sailed in terms of we're not going to see a new one come up tomorrow, which will meaningfully impact. That means that we know the names that are there now, and it's not the ship has not sailed in terms of being able to still join them, but definitely as an early stage investor, not where you're seeing that there will be much coming up.
Look, as an early stage, of course, but those companies, there might be, a $1 billion+ company emerging, maybe.
Yeah, but meaning it won't be the foundational models. It won't be the,
It will be absorbed. Those companies will be bought by the Googles and by the Microsofts of this world. That's my thesis. And this is why, by the way, I'm playing those stocks. And if you see what's happening with these stocks currently in the market, including NVIDIA, it is exactly, the market is betting on the same thing, what I've just said.
Yeah, and that, of course, has incredible ramifications for any investors that would be doing early stage investments today. You mentioned regulation. I'd love to ask you your perspectives on the AI Act in Europe. Do you think that we're out too early? It's one thing doing what we've done with GDPR. That was a very well-known space. It's problems we've had for a very long time. Anyone could see that doing something there would probably make sense. Same thing with climate. I just spoke to Michael from Regeneration VC the other day explicitly about that point, right? That, well, climate, we kind of know how to regulate, so that should be doable. But there's definitely a big question mark when it comes to regulating anything in AI at this time. What is your take, Steffen?
Yeah, look, I don't want to be too skeptical. And in particular, Andreas, I can tell you in Germany, which turned out to be, I think, the company in the Western Hemisphere with the lowest growth rate in terms of GDP. We are talking a lot of, is a lot of negative and critical talk around. But to be totally honest, and my heart is beating here for Europe in a way also to catch up on AI. When you talk, and now I'm quoting probably people from the US, when you talk to AI experts and leading investors, people from Khosla and other funds, they said that this train really has left the station. It is very, very unlikely that Europe will be able to catch up. It doesn't start, with the regulation that we'll talk about your question in one sec, but think about the data protection law. Why are all talents, or many talents, not all talents, but many talents leaving Europe? It is because of data protection and data regulation law. That means that they don't have, if you run AI algorithm, what you need as food, as you know, is data. And if you don't have data and no access to data, your algorithms will never fly, and you will never develop something real. So it starts already with data, and the new regulation. It's quite interesting. Europe is probably the first and only ones. They are spearheading this. But what are they regulating? They should first wait that an AI ecosystem is emerging, and once this system has developed and is maybe is crying for regulation, then put the regulation in power. We took the other step around, started with regulation before an ecosystem has even in a nascent status has emerged. So I believe it's a fundamentally wrong thinking about how to approach it. You must first make sure that the political and economic framework is out there for companies, young companies, established companies to build this ecosystem together, by the way, with universities, and large corporates, and then we can think about regulation. So one step after the other. If you talk, frankly, behind the scenes to some leading people in the US, they are laughing about the regulation.
Yeah, I think it's very clear. I think we hear the same thing in Europe from many in the venture space and startup space. It's not a good situation for us to be in when we're looking at this mega trend.
Take a start.
Okay, so now let's get into the Moonfare conversation. But before doing so, let's go to our Take a Stand, where I'll ask you to comment on the following quote by Colin Hanna from Balderton.
We're at a point on social media where too much of human discourse is owned by too few people. We need to fundamentally change that. We need to sort of come back to having a public commons that is owned by the public rather than is owned by private individuals.
Look, I love this quote, Andreas, and I tell you why. We talked about AI, and I'm transferring or putting this quote into the AI space and AI world. And what she's saying about social media is even more so true for artificial intelligence. Look, artificial intelligence has a tremendous potential, and we know this, to make the world a better place. But when you think about what it does, and we talked and touched a little bit about it, it is dependent on data, and many of those data come from private individuals like you and me, from consumers. And in my view, those data belong to those people who are providing them. There's no free lunch. But in reality, it's very different, because we all give our data away in return for services that we are using, in the internet and other places. So in reality, those data are in the hands of very, very few companies. And this is, for me, a concern. And this is a major topic. And this has to be, by the way, figured out, whether through regulation or other means. Because what it causes is an imbalance between a few very dominant players and us as data providing individuals and users. It's David against Goliath. And what will happen, as this is so important, for mankind, for countries, for governments, there will be regulation. And as I said earlier, I believe this will be a highly regulated industry at some stage, where certain mega players are working collaboratively with the governments in their countries to make best use of AI. But what I would really embrace, and this of course comes out of my thinking of democratization, which is the mission of Moonfare, and we might talk about it. I think really the concept should be nothing about us without us. And this means really that the AI companies would have to share their knowledge, their insights fully with users and data providers. And I would take this entire thinking one step further. I would say that as the AI companies are living from us individually with our data, there should be a democratization of the ownership of AI companies. There should be an independent marketplace where you can trade ownership stakes using blockchain technology. Everybody who is providing something should get a stake in return, and should also benefit from the unprecedented value creation that's going to happen in this marketplace.
It's funny. I have on our Substack, right? I have the little thing that I can toggle on or off, whether I want to allow AI providers to dig into our data. And I was like, well, I'm a very, very big user, so I kind of want to add to the mother brain, right? But on the other hand, you're always also like, what are the long-term ramifications of this? And is there any way that I could monetize this? It's very interesting. It's a very interesting time we're in. You mentioned blockchain there as a potential solution to it. Could you tell me a little more about that? Just because that's also my thinking, that we need to, if we need to tie the source of data to the final use cases of that data, probably has to be done with something very similar to blockchain.
Yeah, look, what we are talking here, and we are taking this very important example of AI, is a more, in my view, fundamental injustice, I call it. Andreas, we as an industry, venture capital, private equity, we are all benefiting from a trend, an unprecedented valuation that's happening in private markets. Think about holding periods of, tech companies have gone from an average 5 years to close to 10 years. So much more of the value creation is eaten up, so to say, in the private world before other people that are playing stock markets can access, and participate in the value creation. The amount of money flowing into the private world, we're talking about trillions of dry powder, 3 trillion the private equity industry, as an example, is sitting on currently, is enormous. Private equity, including venture, stands for 25% of the global M&A volume. And now, what do I find not justified here? 98% of all people are not participating in this world. It's the pretty rich people, it's the wealthy family offices, the institutions, they all can play it because they can invest into private equity, into venture with a high minimums, institutional players. But then ordinary people are totally left out. They can play stocks, but private equity venture is often closed for them. And if you think about whether it's AI now, whether it's art, think about masterworks in the US, whether it's real estate, whether it's old wine collections, they all have gained substantially in value, 20% in plus, and people couldn't play it. And blockchain is, for me, the breakthrough technology that will allow us people to securitize assets, to tokenize assets, and to make them available, not only available at lower minimums, but also tradable by creating liquidity. And this is going to happen in all areas, not only in my example here, hopefully with the AI companies.
Are you doing that with Moonfare already? Because obviously, to our audience that might not be thinking about retailization or democratization or whatever we call it of our asset class, that is one of the solutions that's being pioneered by some firms. That if you securitize an investment, then you're no longer you're not working with assets that you're not allowed to trade as a retail investor. And for that reason, you can then circumvent the 100K minimum requirements. But that's so from an EUVC perspective, we've always said that is playing a bit too close to the red line. So we don't want to do that. But it is, or at least so you can do it, definitely. But you need to have a different skill set than the skill set that David and I as creators are sitting with.
We think about and work on blockchain and really talk to many global experts and companies out there with our own working task groups, strategic, etc. So we are ready to move, ready to jump once the blockchain stuff really makes sense for our industry. But Andreas, the truth is, currently, if private equity venture capital is probably one of the last asset classes that will really benefit from tokenization. It is much more relevant currently if you think about what Masterworks does in art. You take a piece of art, you tokenize it, and you can trade it, or even real estate, where you have one asset, pretty simple, by the way, in terms of structuring and capital flows, and you tokenize it. It will take time, and as long as the regulatory framework, and you alluded to it, is not yet in place, it doesn't make sense to tokenize a fund, because one of the issues that has not been solved is that you would have to pay in the total capital into the fund at once. There is no solution yet for capital call management over the blockchain. And the regulation has not catched up in terms of opening up tokens over and above professional and semi-professional investors. So there's a lot to come, but my deepest conviction is in 3 to 5 years' time, maybe it's a little bit longer, but we are planning for 3 to 5 years, blockchain will play a role in our asset class. There are companies out there, as you know, in Singapore, ADDX, they have done some stuff with KKR and Partners Group and others. There's a company out in Switzerland, Securitize, they are experimenting and doing great stuff. So the technology is there. the thinking is there, the regulation has to follow.
You said in the beginning of this that you wanted to invest in KKR. You had 100K lined up. You were ready to go, and then you met the the proverbial big hand that said no, 10 million minimum. That's of course what we set out to solve as well. But there is this floor of 100K, which is difficult to manage. I'd love to ask you, how do you have you gone below 100K yet in Moonfare? What are your reflections around that? And tell everyone in the audience a bit more about also. Let's start there about the minimum, because that's the first core problem that you solve, that you don't have to put 10 million in. You can actually chop that into bites and have a syndicate or however you structure it. And how far do you then go down? What's the protection of the investors? All that stuff from the LP perspective.
Yeah, look, this famous minimums, they are really a result of not our intention, and they stand in the contrary, a little bit in the way with our mission to democratize private markets. It's the regulators, for good reasons, by the way, who came up with these minimums. There are two regimes that are really important, in Europe. The most important one is professional investor, and then the so-called semi-professional investor. In the US, it's called qualified investor. It's all more or less the same, but all of these regimes come together with certain minimums, which is really meant to be investor LP protection. That not the grandma around the corner is suddenly investing into stuff that she or he doesn't understand. So there were good reasons. And look, we started really in the very beginning with 200,000. Very soon we figured out in a legally compliant way to bring this down to 50. In the UK, we are down to 75. So there are differences between the countries. In Switzerland is 125 Swiss francs. So that was really our starting point. And people now can go to the Moonfare platform, they sign up, and then they get a suite of pre-selected funds in venture and growth, but in particular in buyout infrastructure. We are looking at 400 funds in a given year. And our team of industry insiders from the private equity industry selects some 20 that make it to the platform. Super rigorous investment selection process. And then you can invest. But 100K, as you rightly say, Andreas, is still a ton of money, in particular if you want to build a diversified portfolio. This is why we have portfolio products, one-stop shopping products, I call it, one-stop shopping solutions, which are baskets of funds where you can invest into certain strategies, growth, buyout, venture, infrastructure, whatever. And then, of course, we have also a path to liquidity. You can liquidate your fund positions through our secondary.
Before we go to the secondary market, do you have call structure in place, so that you call the capital, or is it 100K upfront or the minimum upfront?
Totally right. For the product so far, and now the big innovation, and this is very timely, by the way, our interview, because we announced it on Tuesday. I want to talk about, so far it was 100K, and then think about capital calls over 4 years on average, 25K a year, but still a lot of money. What we announced, Andreas, on and this was for me really a day where my mind and heart was out of the normal space, because we announced our LTIF, our own LTIF, which is a new regime, a new regulatory regime. At the end, without going into the details, it now allows people, normal people, I call them, eligible private investors, to invest into a Moonfare private equity product, which is comprised of some of the most well-known private equity funds in the world, starting at 10,000 euros. So now we are really taking one step further with the democratization of private equity. Now we call it our dreams become true, because 100K is great. It's a step into the right direction, but it's still for very wealthy people. 10K becomes relevant to many, many more people. This is something I'm really I've been waiting for this moment for years.
And it is annoying frustrating that you've had to wait for regulators, right? Yes, but let's not get into that. Before going to secondaries market, you said you're looking at 400 investment opportunities per year. You're picking 20. Could you share a bit more about because of course this is a podcast where we primarily have VCs listening, and obviously being on the Moonfare platform is an interesting avenue for most.
Yeah, look, we started, and at the end, in our thinking, the investor, the LP comes first. So we thought about how can we, become people who are not close to the asset class. How can we get them closer? And we started, Andreas, deliberately with the big brand names. Yeah, so you find the KKRs and the Permiras and the EQTs and all these great, incredible names on the platform who typically have 20, 30, partially 40 years track record, have never lost money with any vintage fund, have managed to navigate through the financial crisis, huge teams, huge global platforms. Why did we do so? Because we believe from a risk return perspective, they are close to unbeatable products. However, for the VC community, we all know this, and there's tons of academic literature out there that in particular emerging managers are often outperforming established managers for many, many reasons, which are obvious, incentivization, etc. And this is why we have launched at Moonfare an emerging manager program, where we really support, so to say, the distribution of these upcoming champions. But we don't offer these products to each and everybody. This is we are taking a pre-selection of our investor base and say who is, so to say, sophisticated and professional, can access this program. The ordinary call it investor on the Moonfare platform is more guided towards the less risky investments that I just stated.
Guided towards or blocked from?
The latter.
Yeah. Do you have fund of funds on the platform?
No, we have our own fund of fund basket products. Those are Moonfare products where we select, in a given year, the top managers of a certain strategy, buyout, growth, US tech, infra. This is what we have, but we don't have other external fund of fund players. Frankly, we believe our concept is that people predominantly can pick and choose their own portfolio. Yeah, they can pick what they want, and the fund of fund over 4 years investment period we don't really like. We like no blind pool risk. We want people to understand what they invest into. This is why our basket products are totally transparent. You know which funds are in there. They are, so to say, vintage products.
Yeah,
we are launching them each year.
Yeah,
and that makes it much easier.
For a fund of fund that would be a kill button, right? That's part of what they trade in proprietary manner. Makes a ton of sense. Now let's go to the secondaries market that you were about to. And I'll almost just let you cue it up from there.
Yeah, look, what we identified as one obstacle very early on for private individuals when it comes to investing into private equity is liquidity. And this is for obvious reasons. We are all human beings. No one knows what's happening in terms of health, in terms of job, in terms of being in a divorce. So people have a natural desire for liquidity. Having said this, Andreas, and that is important, private equity, as you know, and I must repeat this, is not a liquid product. What we do is we provide a path to liquidity. You have good chances to get out of your position because it's in the meantime a large marketplace, but there's no guarantee. Having said that, we have Lexington Partners, which is one of the largest institutional secondary players in the world, with us and as a backstop on that marketplace. But again, they are not obliged. We cannot force them to buy. If you ask me, is the volume high? Last quarter or so, we have in the tens of millions offerings for secondaries on the platform. So there's a lot of volume, there is a lot of efficiency, but no guarantee. We run this process twice a year, so it's not daily. You cannot, go and sell. It's twice a year. We might increase it to 4 times a year. In the beginning, the market was really, 2 years ago, it was dead. No one was selling. Now the world is a little bit different. So there is a need for liquidity. But that's another innovation, Andreas. This is really Moonfare, and it's something that we are proud of, as my team is proud of, is really an innovation out of Europe into the world. Yeah, we were the first ones doing this. We are now the largest ones by far globally. And we have more than 150 other companies copying us. And the secondary market is another innovation. No one else has developed a similar solution globally.
You talked a bit about the size of the transaction volume in total in the secondaries marketplace. Oftentimes, it's very, very difficult to trade a small secondary stake. Can you kind of talk a bit about the bucketing there? Because you have some investors that would then put up a larger secondaries opportunity. Those might be trading a bit better, I imagine, than those putting up a 50K in Fund X.
No, it's interestingly not, because it's predominantly trading private individuals.
Between the private investors.
Yeah,
okay.
Exactly. Yeah, and the bite size for them is on average 200K. This is what they feel on average. Some do 1 million, some even more, some less. But because it's a matching between private individuals, it's easier, so to say, to match the 50 or 100K check with as opposed to a 10 million check.
Now I want to ask you a question, which I'm not asking you to talk about how amazing Moonfare is and how bad the other platforms is, but I think that there are interesting differences between the different providers. Meaning you have Moonfare, as we've described, but then we have in the US Allocate by Samir Kaji and team. I'd love to hear if you'd say, okay, because myself as an example, I say, well, what we offer is completely different from Moonfare. We cater to the community within tech and venture in Europe. It's those people that they invest with us, maybe because they want access to the same asset as you have, but they invest with us because they also want access to the partners. And they only get access to the partners because they have a value add. So we're bringing together a syndicate of people that want to do co-invests, that want to share the deal flow, that want to be stewards of the funds that they invest in, so on and so forth. So it's a completely different offering that we have to the investors, and it's a different profile of investor, right? But with you have a different play that's more democratizing access, and it's less about bringing people from within the community together with other people within the community. It's more transactional, so to say. It's a financial investment. And then I'd love to ask you, if you then look at someone like Allocate, and I'm asking you to put some light on this, of course, because we have an audience that are quite well versed in what are the different players, but maybe a bit less well versed in thinking about the nuances between them.
You're totally right and spot on. All the various players out there, have different value propositions. First of all, let me say, and this is very, very important, the industry expects, the private equity venture industry expects that 50% of the new assets that they are collecting, half, will come from private individuals. So the market out there is enormous. Currently, the institutional market, take Europe alone, is 1.5 trillion, $1,500. The same amount, this is Oliver Wyman and other studies forecasting, will flow over the next, whether it's 5 or 10 years or whatever the time horizon is, will flow from private individuals into the market. What does it mean? There is a shortage of supply, and players like you, us, Allocate, and others doing what we are doing to open up the access in a very responsible and pre-selected and curated way. So what I want to say with that little story is we embrace every adjacent or competitor or additional player in the market, because our problem is not the market size, and we don't have to fight against each other, like if you would sell apples or potatoes. The market is so huge that the bottleneck currently is the education and a nice offering and the smooth process and liquidity mechanisms. So we embrace every player globally, all the 150 copycats. So to your question, what makes them differentiated? look, some of them go more into niche strategies. Some of them go more into mid-cap stuff. Some, as you do, go more into venture. But in all these categories, look, we probably are the most dominant one in traditional buyout and private equity, KKR, etc., where I'm coming from. What is really important in my view is if you play with these players, that you can rely on their curation, what you provide as a value proposition due to your community. That's very important, and that you have players that are not out there for the short term, and try to make smart money very fast and then sell, and what happens after me, I don't care. This is a new game for many people. It's a new asset class, and the worst can happen that people have negative experiences. One thing for clarification, very different for Andreas to what you guys are doing, but Moonfare is also a community. Yeah, what we do is we bring our in the meantime 50,000-60,000 people on the platform. We bring them together on a global scale. We are running 50 events, 50 every week, one in all major cities, in London, in New York, in Singapore, in Paris, and in Frankfurt, wherever, and run large dinners, cocktails, in partnerships with galleries. This for next week we have a huge event in St. Moritz in Switzerland. Last week we had Frankfurt, Brussels. So we are playing this community very, very, very actively, so that people also physically can come together. Not only, by the way, with the purpose to talk about investments, it might be very, very different discussion points, but Moonfare is much more than a transaction platform in the internet.
Do your GPs join into those as well, or is it? So it's just as much a place for the target.
Exactly. Yeah. It's a place for the GPs. Also, typically in I would say 80% of all events, we have one with a large press conference. This week, when we announced our LTIF retail strategy, we did this together with EQT. They had a fireside chat with one of their senior partners. So we are working very closely and also getting access to quite exclusive information. Andreas, as you might have seen, I'm running this formal deal talk where I have Henry Kravis and from KKR, the founder, and David Rubinstein, very recently from Carlyle as my guests. So we are living a very active information sharing community, I would call it.
Yeah, and that's of course a big reason why anyone would invest in these assets. Okay, now let's get into our shout out before we go further into your 3 biggest learnings from your journey building Moonfare.
Love is in the air, everywhere I look around.
But I'd like to just send some love out into the ecosystem. Share with us who you love and why.
You mean whom I love in the ecosystem or in my private world?
Well, I think it's better we keep it to the ecosystem for today.
Okay, in the private world, it would be family first and foremost. Look, in the ecosystem, it is a very, very active environment we are in, Andreas. And why is this democratization theme that you, in a way, we stand for, why did it become such a phenomenon? And the reason why is, of course, starting with the LP, the private investor. It makes total sense, as you know, to invest into venture, into private equity, into private markets. It's accretive for your performance, and it reduces your risk. This is empirically proven what I'm saying. So the end client is clearly benefiting. But what is interesting is that the entire ecosystem, the GPs, the private equity firms, the venture firms, the banks at the end, the UBSs, HSBCs, the asset managers, the BlackRocks, Fidelities, Schroders, the entire us as platforms, the entire ecosystem is rowing into the same direction to foster and support this democratization of private equity, including technology players. We talked about blockchain, etc. So when you ask me, whom do you love? I really love that the entire ecosystem, financial ecosystem, is running into the same direction. And this is why, people at KKR a couple of years ago already said this democratization theme of private equity is probably one of the largest disruptions in financial history. And this is what I believe is happening, because all these forces, all these stakeholders are rowing into the same direction. So in easy words, Trump would say, I love them all.
Okay, I'll let you get away with that one for today then. Now, Steffen, let me ask you about your 3 biggest learnings from building Moonfare. I spent the first 2 days of this week together with Sebastian von Ribbentrop from Joint Capital, and I almost wished that we had done a podcast there, because I realized that I would wish that I had asked him about his 3 biggest learnings, and he of course told me to give you his regards, because he's a big friend of yours. So now I'll ask you instead of Sebastian, what your 3 biggest learnings from building Moonfare?
Yeah, and Andreas, it is funny. Yeah? If I tell the story around Moonfare, people ask me about it and they say, "Wow, what a success!" and so on. It is. We had an incredibly bumpy road. When I started the company in 2016, 15, I left KKR. I talked to friends about it, and my friends told me, "Steffen, this is, you're crazy, you're nuts. You want to build a digital platform where people invest up to 200,000 euros into private equity products they might never heard about. This is like buying a flat over the internet into an asset class people are not familiar with. Go back to KKR, please. We have 4 children." They begged me. Yeah, my friend Heinrich von Liechtenstein said, "Steffen, please, I have to take care for you. You're not yet financially done. This is too much of a risk. Who has done it ever before you? Why is no one else out there?" He said. "Why is no one else out there?" I said, "Look, we are innovating." "Yeah, but do you think you are smarter and better in innovation than anyone else out there?" So there was a lot of skepticism. Bankers, friends from banking told me, "The regulatory framework, you have no clue what you're doing. This is not going to work." So, but I believed in it, and there were many. My first partner and employee, he left after a year and said, "I give up. This doesn't make sense. This will never work." We did market surveys, etc. They said no one will buy private equity through this platform. So my big learning is, and I teach this to my children and to everyone else out there: if you believe in something and you're really convinced there is something, even if there's headwind, even if people tell you don't do it, believe it and do it. Stick with it and run with it. Unless you really don't believe in it. If I would have followed these people, Moonfare would not exist. Yeah, that's my first learning. The second one, Andreas, when I founded Moonfare, I had a long career in private equity behind me. I was 46 or so. I really wanted to incubate it. Yeah, very similar to what the Zamba brothers did with their rocket internet stuff. I wanted to find someone, smart, younger than me, who would run the company on my behalf, and I would be a super active chairman. I would finance, the starting phase, and I would bring in my knowledge and contacts. And I tried to do so, and had a couple of people, who came in to run the company. But what I figured out is you cannot hire an entrepreneur. You can hire a manager, and that's probably better at a stage like where we are now, not in the beginning. But hiring an entrepreneur is impossible. And my personal conclusion was, an entrepreneur who is really an entrepreneur will not work for me. He or she will do something on her own or his own. And a manager might work for me, but not someone who is basically realizing my idea and my baby. So you cannot hire an entrepreneur, and this is why I stepped back into the firm and has been running Moonfare since then. Look, and then at the end, it's not about me. It's not about the idea. What it is all about is team and culture. And when I was, in my late 30s, and Henry Kravis from KKR, he always spoke about culture is so important. I really, Andreas, I never got it. I thought it's a buzzword or something, for HBS management courses. I've understood by now that culture is everything. Culture is the set of values, the set of beliefs we all agree on. Culture is the glue in terms of how we behave with each other, how we interact, how we communicate, how we collaborate together. Culture is, all human respect in one word. And this is what makes it or breaks it. When you ask our people at Moonfare, they will not tell you I'm working here for the pay, I'm working for the stock options. They will tell you I'm working for our mission, but first and foremost also for the culture and the team, because it is a culture of no assholes, a culture of integrity and respect. This is what makes great companies. And I can only tell everybody, whether you are running a fund, a venture fund, or a large company, one thing you must get right is the culture, and the team will follow.
I have one question, and it's probably to the culture point. That's at least where I thought about it. I've oftentimes found myself in conversations with very senior GPs thinking about hiring IR people. And they tend to say this is incredibly difficult because they don't understand venture, or it's very hard to find someone who understands venture, who can be in a very volatile world where LPs are so different and so on and so forth. I can't help but think that someone like you who have built a platform that is meant to take out the IR person almost, at least from a fundraising perspective, must have some thoughts, even though it's not IR specifically that you're doing there. But I can't help but think that you must have some thoughts around how to correctly present an investment opportunity to a potential LP in a platform/marketing way where it's actually doable by people that haven't spent 10 years in venture.
First of all, Andreas, I think you need both parts, so to say. You need the specialist or the person in IR and us to make it work. Look, what we do is basically we take the documentation, the private placement memorandum, the investment memorandum, we take our due diligence material, of course, we take the LPAs and the legal stuff and legal documentation and put it on the platform, and then open it up in a very digestible, easy to read format. You can find everything at one place and so on. What we then do is, tons of material in terms of education. What is venture? Following your example, what would be a secondary? How does venture work? What are historical returns and so on? And then we would typically have the manager, the GP, who is on the platform, also be, whether it's in a webinar or a Q&A session, and explaining what she or he is doing. Having said that, many of the interactions with my team are at the end happening between us and the IR person. So when it comes to specific questions, when it comes to specific documentation, when it comes to questions in due diligence. So without an IR person, we could not run our model. It's complementary for me.
You put all this data on the platform. I cannot help but imagine that you have a ton of interesting insights on LP behavior on the platform. Is there some that you can share?
Yeah, no, we do. And we share this, by the way, publicly. If you go to the Moonfare page, and really, it's not everything, is so important, but this is worth a read because it's proprietary data about the investor behavior. And you read it, you can see what people favor and what they don't favor. And Andreas is very interesting. What happened is, people started with buyout. Then we had an incredible demand in 2020, 21, 22 for growth and for venture. Growth and venture made 45% of all our assets under management that we raised in these days. And then after, call it the shock from the interest rates and increases, people really went back into protection mode and are now very much looking for infrastructure, still buyout and credit. Credit because as an alternative source of financing for the private equity industry, very, very much en vogue right now. And people are investing there for good reasons. Having said that, very recently, starting Q3, Q4 already, we see, and also when we ask our investors, we see an increasing interest coming back in tech and venture. And that was interesting because after the grand financial crisis, it took years before this interest was about to come back. Now it came back much quicker. We are seeing this, by the way, in the stock markets as well. And as you know, private markets are lagging behind when it comes to valuations, etc. Stock markets by some 12 to 18 months. So there are all signs, stock markets plus behavior on our platform, that venture and growth is coming back to play.
We could go on, and I would love to, but we better get into the quick fire.
And now, the quick fire round.
This is the section where we ask you 3 quick answer questions. Are you ready for it, Steffen?
Of course.
What advice would you give to your own 10-year younger self?
Look, I made so many mistakes, and when I think about these questions, I could probably talk for hours. Look, one very important thing is don't live your dreams. And I said it earlier: if you believe, in something, stick to it, make it happen. So take out of your vocabulary, "I wish I had." That's not a good one. Yeah, "I wish I had" should not be. "I wish I had" should be stand for "I have done" and not "I wish I had done." That's one. Second one is, we are all human beings, and we tend to be extremely dependent on external recognition. "Wow, good job. Wow, was a nice chat. Wow, Moonfare is one of the greatest companies ever. Wow, you are so smart. Wow, you went to Harvard." Forget about this. If you stay there, and if you are just dependent on recognition, you will never go out of your comfort zone, because you will stay where you are, where you get all this recognition. Make yourself independent from the acknowledgement of others. Very, very important. And associate to it, once you have done so, leave the mainstream. We are all behaving in cohorts. Yeah. We are all doing more or less, what is the neighbor doing? What is this guy doing? This person doing? Forget about it. You will never find your own edge. You will never be innovative. You will never come up with a great idea. You will never be a person that is, different and really interesting if you stay in the mainstream. And then last but not least, I keep on telling this my children all the time. I had a ton, maybe, different generation, too much, I would say, respect for adults and elder people, and I was not speaking up enough because I thought they might be much more experienced. I have no right to play, no right to say something. When I grew up, we had to be silent when someone else more senior was talking. If you have to say something, say it, and don't be shy to speak up.
Now, what are your top tips for VCs across Europe who are fundraising?
Look, the honest answer is you have to ask yourself, in my view, and I asked this question when I founded 7GC, 7 Global Capital, our US fund. What is your reason for being? Is there really a need for another venture or another growth fund in Europe? What is really your investment thesis? Why are you different from the established players who might have, a more pronounced brand name, larger resources, etc.? So what is really your investment thesis? It must be something else. If people ask me, shall I go into venture? I always tell them, yeah, if you have something new to invest in or a new thesis, you should. But just jumping into venture for the sake of it is probably not smart. You have to be the best positioned to win in this field. The other one is, it is extremely difficult to raise a first-time fund, even a second-time fund. People know this. You know this, Andreas. You need people who trust you, and ideally, you bring an anchor with you. I would focus my fundraising in the beginning around an anchor investor who puts down some real money, and then others will follow. And then very, very important, the entire industry it's still making the same mistake. We didn't make the same mistake at 7 Global, but I made this mistake in the past. Don't be cyclical. It was insane in terms of valuations, what we all saw in 2021. We saw in Sars 40 times revenue, forward-looking multiples, that have been paid. Long-term average, as we all know, is 10 times, but people were still paying the money. Why? Because it was the cycle. We didn't make this mistake at 7GC. We paid on average 7 times forward-looking revenue. So we were disciplined. And why? Because we have learned out of our history, dot-com crisis and exaggerations in the 90s, that this is not healthy. So please don't run with everybody and be courageous enough to say no to a deal if you think pricing is insane.
And now, finally, what is the most counterintuitive thing you've learned in venture?
Look, everyone is afraid of making mistakes, and everyone in particular is afraid of losing money. And I am so. I'm super conservative. I really don't want to lose money. I don't want to make mistakes because I've learned that making mistakes is something that has to be avoided at all costs. This is bullshit. If you are an investor, you have to lose money. You will not make money before you lose money, or you will make money, but then you will lose money. Losing money and making money, comes in hands, and this is what fosters, your thinking. This is, failure. To understand failure as a learning experience, and as I said earlier, failure. I made the mistake and invested, in hype phases before 9/11, etc., and lost a ton of money. I've learned that you have to be anti-cyclical, that you don't run with the herds. Learn from your failures. This is what you have to do. All successful entrepreneurs I know, all successful investors I know, they embrace failure as a necessary part of the innovation process, of any disruption process. At Moonfare, we do make failures every day. Any innovation process comes along with failures. And if you're afraid of making failures in venture investing, you probably should change your job.
Steffen, before we wrap up today, I will close with the way we always close. And that is asking you to share with us a controversial opinion or uncommon belief that you hold that most people around you don't believe in.
Look, every generation and in every development of mankind, there are different beliefs that are inherited from the past, from your parents, from other people. And one belief that I don't share anymore is that going to university is necessary. I even believe that going to university is in many cases destroying value. And why is it? Because we are living in a totally different world, and we talked a little bit of AI and what is yet to come. I believe that going to university is driven by fear. You don't want to do something wrong. I get my degree, like in the old days, going to a bank for 2 years, and then you can always go to a bank. You're in safe hands. This is again, in my view, bullshit. I doubt really whether the costs are worth it. I doubt, and I would say what you learn at university is nothing more than conventional wisdom. That's what is out there anyway. And this wisdom, due to AI and the accessibility of data and information, and not only data, is becoming a commodity anyway. So what is needed is innovation. Ideas rule the world. It's not, that you digest what has been out there and that you become the greatest learner. This is available. ChatGPT will be smarter than you in writing your thesis. What is needed is people that are thinking out of the box, that are questioning conventional wisdom, that are questioning common beliefs from the previous generation, that are independent from being recognized and acknowledged by others, and only do what they want you to do. And I believe there are so many other sources where you can learn this, whether it's self-directed learning, whether it's apprenticeships, whether it's entrepreneurship. Think about some of the greatest entrepreneurs. They stopped university, never went to university. You can, do vocational training. Yeah. You can, whatever, you can talk and find mentors. You can, start working right away. The most important thing is for this generation is innovation, creativity, and connection between the dots. And I doubt that this is what you necessarily learn at university.
I don't think I could agree more, but I'm an old student president of my university, so that is not a good situation. Steffen, thank you so much for joining us today. To everyone listening in, I really hope you enjoyed this episode as much as I did. Do not forget to drop us a review, follow the pod, and subscribe at eu.vc.
This episode is brought to you in partnership with 0100 Conferences, which organizes networking events connecting LPs and GPs in private equity and venture capital firms across Europe. Their upcoming event is 0100 Conference Europe from April the 16th to the 18th at Leonardo Royal Hotel Amsterdam. This is a pan-European opportunity to network with major LPs and GPs from firms like Bain Capital, Permira, EQT, 500 Global, Alvin, ESAS Holding, the Carlyle Group, Adams Street Partners, Aegon Asset Management, and Odo BHF. Save the dates, April the 16th to the 18th at Leonardo Royal Hotel Amsterdam.
This was their finest hour.
Tear down this wall. It's more than just an alliance. This is a union of values.
United and determined, we can serve as a model for other regions of the world.
The nature of a problem requires a European response.
Europe is a story of new beginnings, new beginnings.
Let's start acting.